Decentralized finance, or DeFi, is transforming the way we think about money. Unlike traditional finance, DeFi operates without intermediaries like banks or brokers. Instead, it uses blockchain technology to provide financial services. This includes lending, borrowing, trading, and earning interest. DeFi is relevant today because it offers an alternative to the traditional financial system. It gives people more control over their money. Plus, it's accessible to anyone with an internet connection. This is a big deal for people in places where banking services are limited. The potential of DeFi is enormous. It can reduce costs, increase transparency, and open up financial services to billions of people. This essay will explore how DeFi works, its benefits, and how you can get started. By the end, you'll have a clear understanding of DeFi. You'll see why it's considered the future of finance. To understand DeFi, you need to know some key terms. First, there's the blockchain. This is a digital ledger that records transactions across many computers. It's decentralized, meaning no single entity controls it. Next, we have smart contracts. These are self-executing contracts with the terms written into code. They automatically enforce and execute agreements when conditions are met. For example, if you lend money through a DeFi platform, a smart contract ensures you get repaid. Liquidity pools are another important concept. They are pools of tokens that provide liquidity for decentralized exchanges, or DEX. Users can deposit their tokens into these pools and earn rewards. This helps keep the market liquid. Lastly, decentralized exchanges, or DEX, are platforms where you can trade cryptocurrencies directly with others. They operate without a central authority, using smart contracts to facilitate trades. DeFi platforms like Aave and Compound are popular for lending and borrowing. On these platforms, you can lend your crypto and earn interest, or you can borrow against your crypto holdings. This is done through smart contracts, which ensure transparency and security. Aave, for example, allows you to earn interest on deposits and borrow assets. It has a feature called flash loans, which are instant, uncollateralized loans. Compound, on the other hand, lets you supply assets to a liquidity pool. You earn interest based on the supply and demand of that asset. Another key tool in DeFi is yield farming. This involves lending your crypto to earn rewards in the form of more crypto. Yield farmers often move their assets between different platforms to maximize returns. Decentralized exchanges like Uniswap allow you to trade directly with others. Uniswap uses an automated market maker, or AMM model. It sets prices and facilitates trades based on supply and demand. One of the main benefits of DeFi is accessibility. Anyone with an internet connection can use DeFi services. This is particularly important for people without access to traditional banking. Lower fees are another advantage. DeFi eliminates the need for intermediaries, reducing costs. For example, sending money through a bank can be expensive. But with DeFi, you can transfer funds at a fraction of the cost. Transparency is also a key benefit. All transactions are recorded on the blockchain and can be verified by anyone. This reduces the risk of fraud and increases trust in the system. Finally, DeFi offers financial sovereignty. You have complete control over your assets. There are no banks or institutions that can freeze your funds. This is especially important in times of economic instability. Section 5. Navigating the risks and challenges in DeFi. While DeFi has many benefits, it also comes with risks. One major risk is smart contract bugs. If there's a flaw in the code, it could be exploited, leading to loss of funds. That's why it's crucial to use platforms that have been audited and are well established. Another risk is market volatility. Cryptocurrencies can be highly volatile, affecting the value of your investments. It's important to diversify and not put all your assets into one platform. Security is another concern. Unlike banks, DeFi platforms are not insured. If you lose your funds due to a hack, there may be no way to recover them. Always use strong passwords and enable two-factor authentication. Lastly, regulatory uncertainty can be a challenge. DeFi operates in a gray area in many countries. It's important to stay informed about the legal status of DeFi in your region. Section 6. Practical steps to get started in DeFi. Getting started in DeFi is easier than you might think. First, you'll need a digital wallet. This is where you'll store your cryptocurrencies. Popular options include MetaMask and Trust Wallet. Next, buy some cryptocurrency. You can do this on an exchange like Coinbase or Binance. Ethereum, or ETH, is a good starting point, as many DeFi platforms are built on the Ethereum blockchain. Once you have your crypto, choose a DeFi platform. Research different platforms to find one that suits your needs. Look for platforms with good security and user reviews. Finally, start small. Don't invest more than you can afford to lose. Begin with simple activities like lending or staking your crypto. As you gain experience, you can explore more complex activities like yield farming. Section 7. Comparing DeFi to traditional finance. DeFi and traditional finance, or TradFi, have some key differences. One major difference is control. In TradFi, banks and financial institutions control your funds. In DeFi, you have full control over your assets. Costs are another difference. TradFi often involves high fees for transactions, loans, and other services. DeFi, on the other hand, reduces costs by eliminating intermediaries. This can make financial services more affordable. Transparency is also a big difference. TradFi operations are often opaque, with little visibility into how decisions are made. DeFi transactions are recorded on the blockchain and can be verified by anyone. Lastly, accessibility sets DeFi apart. TradFi services are often limited to those with access to banks and credit. DeFi is open to anyone with an internet connection, making it more inclusive. Section 8. Real-life examples of DeFi in action. There are many real-life examples of DeFi making an impact. For instance, people in developing countries are using DeFi to access financial services they never had before. They can save, borrow, and earn interest without needing a bank account. Another example is the use of DeFi in remittances. Sending money across borders can be costly and slow through traditional channels. DeFi allows for faster and cheaper international transfers. DeFi is also being used for fundraising. Projects can raise money through initial coin offerings or token sales. This provides a new way for startups to get funding without going through traditional venture capital. Lastly, DeFi platforms like Uniswap have revolutionized the way people trade cryptocurrencies. They offer a decentralized alternative to traditional exchanges, providing more control and lower fees. Section 9. The role of smart contracts in DeFi. Smart contracts are the backbone of DeFi. They are self-executing contracts with the terms written into code. When conditions are met, the contract automatically enforces the agreement. For example, if you lend money on a DeFi platform, a smart contract ensures you get repaid with interest. It eliminates the need for a middleman, reducing costs and increasing efficiency. Smart contracts are also used in decentralized exchanges. They facilitate trades between users, ensuring that both parties fulfill their obligations. This makes trading faster and more secure. However, smart contracts are not without risks. If there's a bug in the code, it could be exploited. That's why it's important to use well-audited contracts and reputable platforms. Section 10. Ensuring security and managing risks in DeFi. Security is a major concern in DeFi. Unlike traditional banks, DeFi platforms are not insured. This means if your funds are lost due to a hack, recovery can be difficult. To mitigate this, always use strong passwords and enable two-factor authentication. Another security measure is using hardware wallets. These are physical devices that store your crypto offline, making them less vulnerable to hacks. Ledger and Trezor are popular options. It's also important to diversify your investments. Don't put all your funds into one platform. Spread them across different platforms to reduce risk. Lastly, stay informed about the platforms you use. Look for platforms with strong security measures and positive user reviews. Regularly update your knowledge about new security threats and how to protect against them. Section 11. Taking control. Your path to financial freedom with DeFi. DeFi offers a unique opportunity to take control of your finances. By understanding how it works and its benefits, you can make informed decisions. Start by setting up a digital wallet and buying some cryptocurrency. Next, explore different DeFi platforms. Start with simple activities like lending or staking. As you gain confidence, you can explore more complex options like yield farming. Remember to prioritize security. Use strong passwords, enable two-factor authentication, and consider using a hardware wallet. Diversify your investments to reduce risk. By taking these steps, you can unlock the full potential of DeFi. You'll have more control over your finances and the opportunity to achieve financial freedom.